What's going on, guys? It's Kyle. Welcome to the Stocko YouTube channel. In today's video, we're going to be doing a fresh SoFi stock update. Jerome Powell has spoken. The overall speech was very solid. They plan to do a taper most likely in the next 1 to 2 months. Interest rates may not go up for a while. He sees good economic recovery, temporary inflation, as well as labor force coming back very strong. The only setback could potentially be a massive COVID-19 outbreak with the Delta, but overall a very solid speech. So I'm glad we just got that out of the way. We're going to be covering a lot of cool things with the SoFi stock, its upside potential, Analyst that just put out another bullish article, as well as options and how options is really affecting the stock right now and what the big money is doing. Only if you feel this video gives you a better insight on the SoFi stock. Be sure to subscribe to the channel. I'll be keeping you updated daily with all of the growth stocks and spec plays. There's going to be a lot of great information coming out. You don't want to miss it. Let's get into the video. All right, guys. So we see after that speech came out, S&P, Dow, and specifically the NASDAQ tech heavy is really, coming back to life, and the Russell 2000 small caps is really getting a big boost, 2.9% gain. So SoFi is down 1.6%. I mean, it's holding up pretty solid in the 14. It did get rejected by the $15 price, I believe, on Wednesday. If we're looking at the 5-day chart, it looks like we hit about 1507, and then we, really sold off aggressively, into the low 14s once again the past 2 days. So I really believe this stock is a great buying opportunity in the $13, $14, or $15 range. Don't try to time the market. Just buy gradually, because I'm telling you, if some crazy news breaks out, you're sleeping one morning and the stock's up 30% off of some really good news, some bank charter approval news, you're going to be mad, you tried to time the market. So don't time the market. Just buy in gradually, week after week. That's what you need to do if you've done your research on the company. So it's about 3 o'clock. We can see, SoFi is selling off into the close. You can see right here, I got a $15.17 price average, $39,000 in this account. I have another account where I have like a $17, $18 average. So right now I'm averaging in between $16 in between two accounts. So I'm really happy. I do plan to buy more maybe next week once this, crazy volatility comes down a little bit. But, I'm holding this stock long term for sure. If I'm down 10%, I'm down 15%, it doesn't matter, because I'm holding this stock long term. This is the shakeout, guys. This is what the big money is doing. They're shaking out everybody, and they are buying up the shares that, retail investors are selling. But what I really want to cover is options and how options is really affecting this stock. All right, guys, I haven't covered options on my YouTube channel for a while now. The reason why is, the market is totally different from last year. Last year, we were making some crazy money on options. Everything was flying. You could literally pick almost any company and, you were going to make a ton of money on options. But I'm telling you now, the big money is really watching these options activity, and they are pinning down specific stocks with high, open interest, on these options. And what they're doing, and basically what's happening is, just because the big money owns the stock, owns, millions and millions of dollars, they will short the stock, because they can make money, when a stock is not even moving at all. They can just make a stock for pinning the price down, and, these call options are just expiring worthless. As you can see right here, on a Friday, you're seeing a sell-off, and I'm going to show you exactly why. We have massive option activity, and, pretty much everyone got burned on these options today. So if we look at the option activity, expiring today, people may have owned these options for, the past, couple of weeks, and these options have just got, pushed down since that earnings report, really hammered. And we'll just take a look. Okay, the 1450s, that's a good amount of open interest, 7,000. But look at these 15s. 15s have almost 30,000 open interest. So guys, the break even is 1501. All of these options are going to zero. Okay, if anyone was buying these the past 2-3 weeks, that's what the big money's doing. They're pinning these down on weakness. Even though this stock has, much higher price targets, there's really no catalyst right now into a bank charter. And each week they're just burning up these options. So guys, in my opinion, if you want to play options, number one, you don't want to invest more than 20% of your portfolio, of your net worth. I've been telling people this for 6-8+ months, into this new year, because, I haven't been playing a ton of options like I was playing last year. Last year, we were making some really good money on options, but guys, 20% absolute max. And right here, guys, you want to be going, out into like, I would play absolute minimum right now. January 21st, 2022. This is the earliest option I would play. What this gives you is this gives you two earnings reports, two more earnings reports, and most likely a bank charter approval. So everyone trying to time, August and September options right now, the big money is penning these down hard. In a day where I'm watching 15 other growth stocks that are all green, this is the only one that is red today. And look at that open interest. It's absolutely insane. So let's just take a look at these January 21st, 2022s. It'd be all right to play maybe a 17 or a 20. These are $1. This gives you like 5 months of time frame, okay? If the stock does make its way up to, maybe 30, 35 max, towards the New Year's, you're going to make a ton of money on these two options. And as you can see, look at that, guys. I already knew it. Look at the open interest on these. I didn't even click it prior to making this video. 38,000 open interest. So these people, are getting, pinned down a little, but they can recover, unlike those short-term options. So this has ridiculous open interest as well. But if you really want to play safe, of course, these are the leaps. These are the best option. But as you can see, options right now in 2022 are really getting hammered. And what I just heard on CNBC, it really makes sense, guys. They have said in the past 2 years, since the market has, really ramped up, since the crash, option activity is up sevenfold, 700% more option activity. Who is that to blame, really? That is, Robinhood, because Robinhood is making it so easy for retail investors to buy options, okay? They have over 20 million users, okay? And that's what's happening, SoFi is a high growth stock, but guys, people are not buying options, but you can see me, I am buying stock right now in the short term, okay? If you want to buy options, 20% max of your portfolio and go longer, go into the next year. Give yourself some earnings reports. Give yourself more time for that bank charter catalyst. So I really wanted to cover options for you guys to show you what the big money is doing. They're really pinning this stock down in the short term off of no catalyst. And anyone playing short term call options is getting, pretty much hammered for a long period of time. And guys, I'm telling you right now, the big money is pinning the stock down because, people are losing a ton of money, selling out in the short term. But look at the, institutional ownership activity. Institutional ownership has increased to 39% of the outstanding shares, okay? There's a total of $4.5 billion being held by the institution, guys. This market cap is right around, 11 to 12 billion right now. So you can see increased positions, of 184 holders, the past, month or so. So there's been a massive increase, a little bit of a decrease, 37 decrease in positions, but overall, institutional ownership is up to 249 owners. And the new positions, guys, of the 118 holders, 288 million shares have been purchased. The total float right now is around, 800 million. So this stock, I believe, has very, very, very solid strength in the $13, $14, $15 range. I wouldn't try to time it, but I'm just saying we got some strong support in the 13s and 14s right now. So that's what I'm telling you I'm doing. I'm chipping away at this stock, buying slowly, okay? We've gone over the growth story, okay? This company's growing at 74% year over year. You want to be buying this stock up on the red before a bank charter approval. Guys, once again, we finally got another bullish article on Tip Breaks. This analyst positive on SoFi stock as bank charter comes within reach, okay? We don't know the time frame on the bank charter, but it could happen very soon. Rosenblatt analyst Sean Horgan rates SoFi shares a buy along with a $30 price target. Investors could be pocketing gains of 111% should Horgan's forecast hit the mark over the next 12 months. So guys, if you're buying right around now, that's giving you 100% upside in the, short term, less than a year on this stock right now, according to this analyst. Horgan recently sat down with CEO Noto for a fireside chat during which Noto laid out his thoughts on where SoFi is today and where this fintech stock is headed in the future. There is no challenger bank better positioned to secure a bank charter right now. This subhead from Horgan's report pretty much summarizes his opinion on where SoFi is today. Currently, SoFi comprises three main businesses, lending its largest contributed 86% of the company's revenue in 2020. But Horgan notes that this division should shrink to less than half of the company's business, 43% of revenues by 2025, as the company diversifies by expanding its other two divisions. Technology, 15% of revenues now, but moving towards 25, and financial services, just 2% in 2020, but growing rapidly of its small base towards 32% of revenue by 2025. So this is a very good thing, guys. They're not going to be heavily dependent on lending, okay? They're diversifying their business. That is giving them less risk in the future. And once again, you really need to thank, this analyst coming out, because I believe we're not getting a lot of analysts right now because we are in that SPAC stock category. Even though that this company was a CNBC Disruptor Top 50 5 years in a row, they completely vanished talking about it because they went the SPAC route. What the SPAC does is it gives retail investors to get in at an early price, not getting an overvaluation like these IPOs when they come out the gates at 100 times sales. Just look at some of the biggest IPOs that just went public, guys. DoorDash already has 13 analyst coverage. It's an IPO. Airbnb has 21 analyst coverage. It's an IPO as well. Snowflake has 21 analyst coverage right now, and it went the IPO route. SoFi went public at the exact same time, and it is a SPAC stock, guys. 2 analysts covering this stock. This is some of the biggest manipulation you're ever going to see inside of the market, and this is buying opportunities, because I'm telling you, these big banks do not want to come out and put buy ratings on the SoFi stock, because they know that SoFi is major competition and, stealing customers, over time, trying to disrupt that $2 trillion industry. So you're not going to be seeing, big banks, come out, giving this thing massive buy ratings, because that's going to be taken away from their stock. But you might see some of these, financial analysts come out, with some of these, hedge fund coverages. So they might be coming out more, once the bank charter approval finally goes through. But guys, we got, 87% upside. And one of these, buy ratings is like a $23 price target, pretty low right now when you look at their price to sales. And speaking of growth, let's speak a bit about the growth, which I continuously cover for you guys. From $621 million in revenue 2020, Horton estimates that SoFi will grow around 60% to the end of the year at $979 million. Then roughly triple that sum over the next 3 years, until by 2024, SoFi will be pulling down as much as $2.86 billion in annual revenue. Just to give you guys an understanding, of what, close to $3 billion in revenue, Zoom and Snapchat are going to be doing about $4 billion in revenue this year. So guys, we could potentially be, one of the biggest fintechs, in the next 2 years at the rate they are growing. This is a massive company. This is not a small company with, 1, 2, 300 million in revenue. We're already doing $1 billion in revenue, guys. This could be a massive company in the future. And if you think 2024 is a long time from now, guys, look how fast time has flown with this, coronavirus. That was over 18 months ago. So almost 2 years has flown by just like that. So we're about to be entering 2022. I know you guys can hold this stock for 2.5 years. I'm potentially, hoping for a tenfold in the next 3 years, okay? We're going to be looking at a massive company in the making. There's a lot of, volatility in the short term. You got to hold and you got to be patient. And this last part of the paragraph basically says the next 2 years, they're going to report negative earnings. And then in 2023, we should potentially see a profit on SoFi of earnings of 27 cents per share. So guys, profitability is coming very soon, okay? They went public at a perfect time for you. Earnings should be very solid, maybe in Q4, we should be getting around, negative 6 cents loss per share or something like that. So we're getting close to profitability. You just got to be patient. It will come with time. So guys, once again, I'm sticking to my game plan. I'm buying this stock every 1 to 2 weeks. When I come across some money, some of my other plays, come up and I can take some profits. I'll be continuously buying this stock. I'm being very patient on this one. Anything 13, 14, or 15, I'm buying up. As you can see right now, I'm down about 6.8%. Not really worried. This stock could fall to 12. I'd be down, 20%, 25%. I'm not sure. It doesn't really matter because I'm long-term on this stock. This is the shakedown. We can see institutional investors are, buying up these dips, and also, you know, pinning down this stock in the short term because people are getting very, very aggressive on short term options. Be very careful. Be sure to stay to 20% max of your portfolio on options, and you will do fine. You got to hold stock if you want to be a long-term investor. And only if you feel this video gave you a better insight on the SoFi stock, be sure to subscribe to the channel. I'll be keeping you updated daily with all of the growth stocks and spec plays. There's going to be a lot of great information coming out. You don't want to miss it, and I hope you have a great day.